and 2024 was the highest, being 45 Kenya shillings per share. And this company also pays dividend in form of interim and final dividend. In today's video, I'm going to share with you a list of the 4 best high dividend winners in Nairobi Securities Exchange, or rather the best income stocks in Kenya. And with this list, you'll have exposure to different sectors of the economy, ranging from utility, banking, and also consumer and manufacturing sector. In addition to that, you'll have exposure to companies that have high growth potential, those with high stability, and also a stable cash flow. And with each and every stock that we're going to talk about, we're going to see the reason behind investing in that stock, the risk that you may be exposed to. And towards the end of the video, we're going to go through how you can distribute your investment across these 4 dividend winners in the Nairobi Securities Exchange. And I'll appreciate if you watch this video till the end, so that you cannot miss out of any information that can help you in your investment journey. And this video is only for educational purpose, so don't take it as a financial advice. Always do your due diligence when it comes to investing in the stock market, and also consult with your financial advisor. So without further ado, let's get started. Coming first in our list is the British America Tobacco Kenya PLC stock, which is currently retailing at 450 Kenya shillings. And one of the most amazing things about investing in Nairobi Securities Exchange is that you are no longer required to buy a minimum of 100 shares. The minimum amount of shares you can buy right now is 1 share. So with 500 shillings, you can invest in this company. And let's see the dividend history of this company. So as you can see, this company has a dividend yield of 12.22, and from 2018 up to now, they have been paying dividend increasingly. So you can see in 2018, they paid a dividend of 35, and in 2019, 33, 2020, 45, 2021, 53.5, 2022, 50 shillings, and 2023 and 2024, they paid a dividend of 50 Kenya shillings. So this company pays dividend in form of interim and final dividend. And let's see the reason why you should invest in British American Tobacco Kenya. Then we'll also go through the risk that you can be exposed to if you invest in this company. And the reason why you should invest in British American Tobacco Kenya is because of the very high dividend. They propose a final dividend of 50 shillings per share for the year 2024. And also this year, the amount of dividend to be paid is around 50 Kenya shillings per share. And also it has a strong cash generation. PAT core tobacco business produce stable cash flow, which support dividend payout. So that is another reason why you should have this company as one of the stock in your portfolio. And another reason behind investing in British America Tobacco Kenya is brand strength. It has a well-established consumer brand, giving resilience even in tough times. And let's now go into some of the risks that you will get exposed to if you invest in this company's stock. And one is regulatory risk. Tobacco is heavily regulated. Tax changes and anti-smoking laws could hurt profitability. So you should always watch out on those kind of regulation when it comes to investing in this company. Another risk that you may get exposed to by investing in this company is rising cost and finance cost. In 2024, PAT reported a 19.5 drop in profit after tax, partly due to high operating cost and financial cost. So this is a company that has to deal with rising cost and financial cost. And finally, another risk that you should be aware of is forex risk, that is foreign currency cost in terms of import and debt, which might erode the profit margins. So those are some of the risks that you may be exposed to by investing in British America Tobacco Kenya. And let's now see the latest financial reports of this company so that you can know whether you should invest in it or not. And the last revenue and profit for the year 2024, PAT Kenya reported net revenue of 25.7 billion Kenya shillings, and profit after tax was 6.5 billion Kenya shillings for the year 2024. And in terms of dividend that they paid in 2024, they paid a total of 50 Kenya shillings. And this year, they managed to raise the interim dividend by 10 shillings per share from 5 shillings in 2024, following a profit of 4.3 billion Kenya shillings. That is in the first half of 2025. So you can see that if the interim dividend has been raised to 10 shillings, then there is high probability that the final dividend will also be high, or the total dividend will be higher than 50 shillings, which was paid last year. And that will only happen if the second half of 2025 is more profitable than last year. And let's now go into our second stock of the high dividend winners in Nairobi Securities Exchange, and that is of a company known as Standard Chartered Bank Kenya. The current share price of this company is 305 Kenya shillings, So with less than 500 Kenya shillings, you can invest in this company also, because you are only required to buy one share, unlike before where you were required to buy 100 shares as a minimum. So for this company, the dividend yield is 14.72%, and you can see this company has been paying dividend increasingly. In 2018, they paid a dividend of 17.27. You can see in 2021 it was 19, and in 2022 they paid the total dividend of 22 shillings. 2023 it was 29, and 2024 was the highest, being 45 Kenya shillings per share. And this company also pays dividend in form of interim and final dividend. And let's now go into the reason why you should invest in this company. And one of the reasons why you should invest in Standard Chartered Bank is because of exceptional recent performance. The net profit was 20.1 billion in 2024, which represents a 45% growth. Another reason why you should invest in this company is high dividend payout. They declare a dividend of Kenya shillings 45 per share, and that is the combination of final and interim dividend. Another reason to add on this is diversified income. They have a strong non-interest income, e.g. transaction service, which is fueling its growth. Finally, the reason why you should invest in Standard Chartered Bank is because of digital and cross-border strength. It has a good potential for future earning growth via digital banking and also international network, so they are able to diversify into other regions. And let's see some of the risks that you may get exposed to by investing in this company. And one is credit risk. As bank, it is exposed to loan default, and these are risks that most banks face. Another reason is macroeconomic risk, that is interest rate shift, inflation, economic slowdown could affect margins. So when it comes to interest rate, it really affects the banks because their main business is in giving out loans, and they make money from the interest from these loans. And finally, another risk that you may get exposed to by investing in Standard Chartered Bank is regulatory risk. Banking regulation or capital requirement could tighten also the margins of this company. So sometimes the CPK announce new capital requirements or new regulation that can affect the banking sector, and Standard Chartered is not left out of such regulation. So you should be aware of some of the regulation that CPK announced that can affect the banking sector. And let's now see the most recent financial performance of this company. For the year 2024, operating income was 50.3 billion Kenya shillings, and the net profit after tax was 20.1 billion, which is a 45% increase from the prior year. Earning per share grew to 47.25 in 2024, and they declare a final dividend of 37 shillings per share, making the total dividend for the year to be 45 shillings per share. So those are some of the financial reports that you can check on and also confirm if you want to invest in Standard Chartered Bank. And let's now go into our third high dividend winner in the Nairobi Securities Exchange. And this is of a company known as Stanbic Holding PLC. So this is one of the shares that you can also purchase in order for you to earn passive income in form of dividend. And as you can see, the current share price of this company is 193.75. So it is also affordable. And in terms of dividend yield, this company has a dividend yield of 11.66%. And as you can see from this graph, the amount of dividend they have been paying has increased over time. And let's see how much they are paying currently. So in 2024, they paid a total dividend of 20.74. In 2023, it was 15.35. 2022, it was 12. And 2021, it was 9 Kenya shillings. And as you can see, currently, the interim dividend for this year was 3.8 Kenya shillings. And if they manage to make more profit this year, they'll be able to announce a better final dividend. And let's see some of the reasons why you should invest in Stanbic Holding share. And one of the reasons why you should invest in this company is because of a strong profit growth, with profit after tax being 13.7 billion Kenya shillings in 2024, which was 12.8% growth. Another reason is big dividend increase, with the total dividend being 20.74 per share, up by 35%. So you can see that every time this company makes more profit, they pay more dividend. And that is a good sign of a company that you should invest in, especially if you are looking for passive income in form of dividend. One of the other reasons why you should invest in Stanbic Holding is improved credit quality, that is reduction in credit impairment, which boosts profitability. As I told you earlier, most banks struggle with credit risk, that is loan defaulting. But for Stanbic Holding, they have managed to contain that, and that has boosted their profitability. So that is one of the reasons why you should also check out this company. And lastly, they have a long-term growth. bank is investing in technology, expanding its asset management and transactional business. As we saw earlier in Standard Chartered Bank, one of their other source of income is transactional services, and this Stanbic holding also is working on transactional business. So this is a great move by the company in improving its growth and also its profitability. And let's see some of the risks you can get exposed to by investing in Stanbic holding. And one is operation cost. In first half of 2025, cost to income ratio rose due to forex exchange and investment cost. And that is one of the main risks you will get exposed to when you invest in companies in the banking sector, because they deal with forex exchange and also investment. So you will get exposed to that. And the main goal here is to understand how such companies are managing such risks. Another risk is earning volatility. Interim drop in earnings, that is, first half of 2025, profit after tax fell by 9% compared to prior year. And this is just normal. Just like any other company, profit margins always fluctuate. But always understand by what margin does this profit fluctuation happens. Finally, another risk that you may get exposed to is dividend dependence on earning. If profits shrink, future dividends may be at risk, and that is normal. So if the profit margin drops, then the amount of dividend that this company will pay will also drop. As you saw, as the company profit increase, they also increase dividend. And the opposite is also going to happen. If the profit drops, then the dividend will also drop. And let's see some of the most recent financial performance so that we can see whether this company has a healthy financial statement. And for the year 2024, Stanbic profit after tax rose by 12.8% to 13.71 billion Kenya shillings. So last year they were profitable, and for that reason you saw the dividend being paid was increased. And this year, if they are profitable, they'll be able to also increase the amount of dividend. And in terms of dividend, they announced a final dividend of 18.9 Kenya shillings per share, with a total for the year being 20.74 per share. So if in the second quarter, this company makes more profit, then they'll be able to increase their income. But know that their profit after tax fell for the first half of 2025. So that is something to watch out. And finally, the payout ratio of this company is also attractive. They have a 60% payout ratio. So for all the profit they make, they distribute 60% to its shareholders. And that is something good about Stanbic holding. And let's now go into our fourth high dividend winner in Nairobi Securities Exchange. And I'll put a quote on this because this company is not currently paying that huge amount of dividend, but there's high potential that in the future it will pay higher dividend. And that is Kenya Power and Lighting Company. The current share price of this company is 14 Kenya shillings, and this company is still under recovery. So it is one of the most affordable stock that you can purchase from this list. And the current dividend yield is 6.41%. The dividend amount is Kenya shillings 80 cents. So last year they paid a dividend of 0.7 Kenya shillings. So this is a company that is riding on potential high dividend payout in the future. But be cautious about this company because we are yet to see the consistency of their dividend payout. So last year they paid 0.7 and this year they will be paying 0.8. So we can see that they are increasing the amount of dividend they are paying, even if it is in small amount. As you know, KPLC is still recovering from their losses. And one of the reasons why you can bet on this company is because of its utility business. Power distribution is a staple essential service, so it is a good defensive play. So the government will not allow this company to fail. So this is a company that you can bet on and also help you to diversify your portfolio. Another reason why you can invest in this company is because of the most recent profitability. They reported at 24.47 billion profit after tax for the year ended 30th June 2025. And they have also proposed a dividend of 1 shillings per share. That is a combination of interim and final dividend. So this company is making profit currently. And also in terms of operation efficiency, the company cited cost control and lower financial costs as contributors to its recent results. So if a company is able to manage its financial cost, then that is a good sign on its profitability. And let's see some of the risks you can get exposed to by investing in Kenya Power and Lighting Company. And one is demand risk. Electricity demand can fluctuate with the economy. So that is one of the risks. Another risk is regulatory risk. Tariff changes, government policy could add the profit margins of this company. And finally, foreign exchange risk. So if KPLC has foreign currency debt and import costs, Currency swing could affect the profitability of this company. And let's see the financial performance of this company as of June 30th, 2025. The revenue came to 219.29 billion Kenyan shillings, which is a slight drop of 5.1% compared to 2024. The profit after tax was 24.47 billion shillings, which is a 18.7% drop from the previous cycle, that is 2024. And earning per share, that is the basic earning per share, is 12.54 Kenya shillings. And finally, they propose a final dividend of 0.8 shillings per share on top of an interim dividend of 0.2, which comes to a total of 1 shillings per share. And those are some of the financial results that you need to be aware of about KPLC, and you can also do more research on that. And let's now go into understanding how you can distribute your investment across these 4 stocks. So if you have 100,000, then this is how you can distribute your investment across these stocks. So with 100,000, you will put 30%, that is 30,000, into the Standard Chartered Bank, and the dividend yield for this company is 14.6% annually. So with that, you'll be able to make around 4,380 shillings annually. And then the next 25% put on PAT, that is British America Tobacco, invest 25,000 there. And then 25% you can also put at Stanbic Holding, that is 25,000, and they have a dividend yield of 11.7%. And then the last 20% you will put at KPLC, that is 20,000. And by following that procedure, you will be able to make an income of around 11,755 Kenya shillings annually. And these are some of the investment tips that you should consider following for you to generate more income by investing in this stock. And one of the investment tips is the minimum amount of period that you should hold the stock. So the minimum is 2 years, but I'll advise you to hold this stock for long term, 5 years to 10 years. For you to realize gain in the stock market, you should invest long term wise. So don't go into the stock market for short-term gain. Always have a long-term goal. Another investment tip is to reinvest all dividend for compounding. So instead of drawing those dividend, just let it reinvest itself into the stock market. Let the stock market be a long-term investment scheme for you. Another investment tip is to buy on a 5 to 10% market dip. So the best time to invest in this stock is when the share price drop, but always be aware of the reason behind the drop of these shares so that you cannot make the wrong decision when purchasing these shares. And the final financial tip is to hold through market cycle, no panic selling. And those are my 4 tips that will help you in your investment journey in Nairobi Securities Exchange. Hope you have been able to gain some insight from this video, and I'm looking forward to seeing you in my next video. Subscribe to this channel and also share this video with your friends.